Hey guys, welcome back to the Falaya Focus Podcast. Today we have Sam Mistretta with Mistr Properties LLC back with us to talk all short-term rentals, how he got into real estate, how he transitioned away from a corporate job into entrepreneurship, and everything in between in life. So welcome in, Sam.
Hey, thanks for having me, Barrett. Good to be here.
Yeah, man, I'm glad you came on. It was awesome seeing you the other night at the Red Stick investor group. It was kind of a great speech, man. Well attended. You pulled in a crowd.
That's awesome.
I know, man. I don't. There were a lot of people in that room, and I don't know if it was because do you have a big presence? It was like, or are people just so intrigued with short-term rentals? I think that might be. Yeah. What are your thoughts? I mean, did you after that talk? What happened? Did people?
Yeah, I mean, people reached out to me. I think there's just a big question mark in a lot of people's minds, about how it works, how to be successful at it and things like that. I mean, I've only done a handful of, these kind of talks or keynotes or whatever, but like the questions I try to think of all the questions, but there's just some, I don't think of. And it's a great conversation.
Yeah, I think people are just intrigued by it because I think everybody wants to own a short-term rental or they want to own real estate and invest in real estate, right? It's like the dream entrepreneurial entry point, right? You can have a normal job, but on the side, have your side hustle, and short-term rental pulls those people in. And plus, it seems doable financially because you can buy a property and have someone else pay for it, right? Yeah. And so that's very conducive to people thinking, hey, I can do this, and I can manage that, right?
Oh, yeah. And in fact, in certain instances, you don't even have to buy the property, right? So there are three different kind of entry ways into the business. One is called rental arbitrage, where you effectively sublease an apartment. So you rent an apartment from somebody, and then you run an Airbnb out of that. That's more of the riskier model. I don't really, I don't dabble in that. And then there's the co-host model, which is effectively, kind of a management model where you don't purchase the asset, you don't own the asset, whether it be a home, apartment, or condo or whatever. You just, are a co-host and effectively manage the property from somebody else.
Right.
And so you get a, percentage of the rental income for that. So you can really get into it for no money down if you're, a great student of the principles and everything. Or, the third entry method is the ownership model, right? Classic.
Right, the more traditional model.
Mm-hmm.
I mean, so, we own a bunch of rental properties, and so every time we put them up for rent, we get nailed with phone calls. Hey, man, can I put your house under? I'll rent your house and then do an Airbnb out of it. That happens at scale all the time. And
really?
These people we got hit up on our Cloverdale one that we just released by multiple people. Most of the numbers were coming from California. So they're obviously reaching out to all markets. It's crazy. Yeah.
Wow.
So it's definitely, no doubt, a big arbitrage, like you're saying, of people attacking rentals and trying to put them under lease and then do short-term rental from afar.
Yeah.
Right?
Yeah. And it's interesting because the market has shifted, like we all know. But like it's shifted in a way due to the, the housing market and the economy and everything, where that, the arbitrage, kind of method or strategy, it's becoming harder and harder because the rents are going up.
No doubt.
So you're on the hook for that note.
You're taking a risk.
That's the biggest risk in any of the, strategies out there.
No doubt you're taking a risk. And from the property owner's standpoint, if they're being transparent with you and telling you what they're doing, which they need to be, you're taking a risk too, because you have people coming in and out, and by and large, as a property owner, from a owner's perspective, the more times you have turnover, the more issues arise, right? I mean, I'm sure I don't have to tell you that. So
not all the time though.
I know. Well,
so okay. It's, there are cases because, after every guest comes in, you have it professionally cleaned and assessed for damages. So at that point, if you see any damages, if you have your systems, processes, procedures in place, then you report your heavy cleaners or your handyman or whatever, report that. and then they can file that claim. So,
Sure.
that's kind of the case a lot of rental arbitrage folks have.
Got you.
So
So
I've
they-
done long term and short term, and honestly, I feel much more safe and secure with short term because I have the ability to inspect that unit on a more frequent level, and then I can actually more quickly have it resolved because there are different things like short term rental, like third party insurances and things like that.
That's where I think it gets interesting is the insurance aspect, right? If you have the right policy and protections in place and procedures like you're talking about, it protects all that, right? I mean, that's extremely important. I guess from my standpoint, it's like I like to be able to set it and forget it.
Yeah.
At some level.
Exactly.
Now, granted, I did get a text from a renter right before we sat down on a
course.
long-term rental,
Yeah.
and she's got a disposal problem. So
Had one last night.
you know what I mean?
That happens in short and long term, man.
Yeah, I mean, it doesn't go away.
No.
So it's like, whatever. I mean, it is what it is. You just have to have a maintenance guy, like you said, in place to execute on that.
Yeah.
So let's talk about the co-hosting. So co-hosting, what is the kind of agreements that you see more frequently in the market? Like what actually is a percentage, or how does that get set up between the person that's going to manage the property and the person that owns the property?
Yeah. No, great question. And just like any business, or any market, people have different ways of shaping this, right? What you're usually going to see is a setup fee if the people are doing it right.
Right.
Just to effectively flip your home into a short-term rental home, because like we all know, long-term rentals aren't the same as short-term rentals.
No, not at all.
And then after that, you have the percentage of the revenue. So there are two bigger kind of nationwide co-host companies, and you'll see, and they have two very different like models, right? So neither of which I feel are treat the property and the account as well as like a smaller kind of, I hate to say boutique, but more of a more efficient management company would, or co-host company. But what you're going to see is one, they're a volume game. So one company they'll say, look, we'll come in and we'll book everything for you for 10% of your revenue, but you have all of the calls to the handyman, you handle all the cleaners. And so they, kind of these add-ons, kind of like the GoPro model, right? You have all these, add-ons and features.
Sure.
So they get in with the lower rate. These other guys, I think that's an Evolve is that company. This other company, Vacasa, they've moved in.
That's who I know.
Yeah. They're typically a vacation rental market. They've moved in here pretty heavy, but they have a higher rate, than most, kind of folks like us. 20 to 25, even upwards of like 30% of revenue. And so, anybody that does good, that, has systems, processes, procedures in place, you can expect 20 to 25%.
That's what I thought. That's what I've heard from a lot of is 20 to 25, and 25 being kind of a lot of, if you want it to where you don't get the phone calls. You know what I mean?
Exactly.
That's ultimately what it boils down to. It's the same thing with Falaya. How much service do you want, right? Do you want full service, or do you want to take it, but you're going to deal with everything and negotiate everything? And we have the same scales of listing packages at our platform. And do y'all do that various variable pricing, or do y'all stick to y'all's exact model?
Yeah. So we stick to our model because we know those results, and that's kind of what you get with us is you get that product. And so we can't really, guarantee a product that is, kind of outside of our sweet spot. And so that's, we're experts in one thing, and that's, full blown,
Full service.
Yeah. Full service,
white glove.
Yeah.
Type thing, which is probably the way to go, right? Because then you can manage it all and you get scale, and then keep your maintenance people happy in that market and keep them fed, right?
Yeah.
So you can actually have volume and be able to service them, right?
Yeah.
You kind of need that in your game because there is a backside to that with the services, the cleaners, and all that.
Oh, that's the biggest part about it is, moving into a new market. So we're in 5 markets. We've got 11 in Baton Rouge. one in Galveston, Texas, 3 listings in Oxford, and 3 in Gulf Shores, Orange Beach area. And the hardest thing about all that is developing the teams.
Sure.
I mean, we can, we can set the house up. Yeah, that takes time, effort, and some brain work. But the relationships to build those tight teams is the hardest thing, and it's also the most rewarding thing.
Right.
So,
yeah, we have some friends that What do you think the biggest pain point is for you? Out of curiosity, like out of everything, like what is the biggest pain point that you're trying to solve on a daily basis?
Really, I think right now is kind of filling our gaps in the occupancies, right? So in our different markets, so filling the off season and kind of shoulder season gaps.
So marketing, or marketing and occupancy right now.
Yeah, occupancy, which in short-term rentals is effectively marketing.
Which is effective. It is marketing. Right?
Yeah,
but you got to get people in the door. I mean, I feel you on that. Right? We could use all the marketing help we can get, which is why we're here, right?
Yeah, exactly.
Right. I mean, we need to get marketing. If people don't know you exist, it's not a good thing, right?
Yeah, we've got just a couple pictures to go by on a couple of platforms, AirBnB and VRBO, and then on our direct booking website. I mean, outside of that, we've got to make our presence known.
Yeah. So I did see some photos of some of y'all's work looking at this before we sat down, and man, y'all do some really cool stuff with the designs. I think that is, speak to the importance of that with Airbnb and VRBO and short-term rentals as a whole. Like, how impactful is design?
Yeah, so for me, I always tell people the 2 biggest elements of short-term rentals are interior design and photos, because like we said, that's your marketing effectively. And so you have to stand out from the crowd. 2020 through 2022, those were the golden years of Airbnb, right? Everybody was looking to get out of their house and work wherever they wanted to. So, and the work was letting them go outside and work from home, so you could throw up Golden Girl's house, right, and get it rented,
right,
and increase it, 100% on the 4th of July and get those rates. Well, the market's normalizing now, and so you have to differentiate yourself. People want to stay in some place that is as nice or nicer than their home, that they can bring their pet to if they have a pet. And so that's that. We have like one, it's funny because we have one long-term rental still, and it's just like comparing all of our other short-term rentals that are just have like a professional designer, touch, and then our other, long-term rental home. It's just like, this looks like so naked, and
yeah.
And but like, it's a great home. It fits, it's in a great part of town, but it's just these are all shiny and
right,
well done, and a little. I tell our designers to go up to 11,
right.
They come with a palette, with a design board. How about this? I was like, that's great, but I think we're at like 8. We need to turn it up a little bit. We need to just stand up because you got to get on the first page.
Yeah, I mean, that's the kicker, right? I mean, same thing with listing photos, like photos, right?
Yes.
The more clicks you get, the more views you get, the more offers you're going to get, as far as I'm concerned for Falaya. Same thing with short-term rentals. The more views you get, the more clicks you get, the more bookings you get, right?
Yeah, it's all about the Airbnb algorithm, right? And just so you've got algorithms too.
That's exactly right. And the photos are everything. And they want it, almost, what I do when I'm like talking to my clients and I'm like on board, and I see, because we do an onboarding call, and they might upload their own photos if they're doing the low option, right?
Yeah.
Because we don't provide them. And I look at their photos and I'm like, you might want to get some professional photos. And you know how my line goes? My line goes, you want to make it look like Airbnb. Like, that's what I say. I straight up say that. I say that on the call to them.
Crazy.
I'm like, because that's what they want. That's what people want, man. I mean, that's what in home sales or home rentals, that's what they want, right? When you have just a stale shell, it's just not the same.
Yeah. And then Airbnb, like I can tell you the clientele is different in Airbnb than what they were a few years ago. They're expecting more now in Airbnb. So the same photos before don't work as well now, just to your point.
Well, the expectations have been raised, right?
Exactly.
It's like Pandora's box has been opened.
Yeah.
And how does that play out, right? You're going to have to keep pushing the envelope to compete, because now at the beginning of this, only a couple people realized that needed to be there. Now everyone realizes it needs to be there. So now everyone's trying to do it.
Yeah.
Now some people might do it better than others, but everybody's trying now.
Oh, yeah.
You know what I mean? Or the majority of people are trying.
Yeah.
You know what I mean? It used to only be 30%. Now it's 80% of people trying, you know?
Yeah.
So you've got to compete.
Yeah. Well, that's exactly. And I'm similar to the residential market. So last year, Airbnb, the whole short-term rental market, grew 20% in supply. Some markets like Dallas grew 40% in supply. God. And so, I mean, it's just crazy. And that's across the whole U.S. And demand, rose too, but it's this year supply is still outpacing demand.
Right.
So that's where the occupancy is crucial. That's where the design is clutch, and that's where the photos are a must-have. So.
Right. I mean, you're obviously competing on a whole nother level now, and short-term rentals are big, which is why I think that big crowd got drawn in to begin with, But we've heard, we've started to see like in the news that Airbnb is struggling, or that short-term rentals as a whole are starting to struggle. And so, how do you think that's going to play out over the next couple years? Do you think the ride is going to continue to go up? What is your outlook kind of on short-term rentals?
Yeah, no, great question. So supply this year so last year we talked about, that was a 20% growth.
Right.
Now this year with interest rates and everything, that supply growth has slowed down a little bit. So, it's just for players coming in, looking to purchase houses, it's tougher. Like the numbers, if you analyze a deal as an investor like you should, a lot of them won't pencil out. But still, there are a lot of folks that are just falling in love with houses and not actually underwriting them and doing the analysis. And that's the people that are trying to fire sale their houses right now, because they didn't do this last year. Okay.
Right.
And so they're finally looking at the numbers, and, there's a hole in the boat and they don't know where it is. And so, after a few months of looking, wow, well, now you bought in a tough, market last year, whenever it started getting really tough. And then now the occupancy is starting to, decline a little bit because people's travel habits have, backed down a little bit because of the economy.
Right.
And, some folks, they just have to sell at a loss. And I hate that. And so that's kind of what my mission is, to help people like, no, don't let this be, a 100% emotional, reaction. Yes, there has to be some emotion in it, I think, in a short-term rental, but the numbers got to make sense if this is an investment for you.
Well, I say that wholeheartedly on all real estate investing, right? Yeah. Like, you do not need to just run into a deal because you want to do a deal. You went to some mastermind, and now you're like know everything about
smartest guy in the room.
Smartest guy in the room. You know everything. I'm going to go tackle the world. Bad idea, because you end up buying something that doesn't work out. You end up buying yourself a problem that you still have to work through, that you're not getting paid for, that you are now have a noose around your neck.
Yeah.
It's like you've got to think it through on the front end, no matter if it's a flip, a rental, a short-term rental, any type of real estate investing. You've got to have contingency plans, exit plans, multiple exit strategies, whether that's short-term rental, long-term rental. Sell it, sell or finance it to a buyer, rent to own, those type of things. There's a million different options on how to exit. Yeah. But the question is, you got to have those plans in place before you even start. What if it does go sideways?
Yeah.
You know what I mean? What if COVID happens again?
Yeah.
What if,
Yeah.
you know, you don't know what's going to happen in the next couple of years with the interest rates and everything. And so you've got to be prepared.
Yeah.
You know?
No, 100%. I love that because it's just too easy to rush into something and give yourself another job.
Right. Well, I mean,
whenever you're trying to get out of one or, you know, do a side hustle.
Well, I mean, you know, take that as a grain of salt, everybody, because I've done it. You know what I mean?
Yeah.
Like,
You gotta,
like, I'm
you gotta
telling
go ahead
you,
and get your lumps.
I'm telling you because I've done it, not because I'm smart. You know what I mean?
Yeah.
You know what I mean? Like, that's
man.
the truth, right? And most people won't tell you that. They'll just act like they're perfect. But, But, you know, I flipped a house, flipped the next house, made some money, made a good money. Let's just keep buying. Let's keep buying.
Yeah. Oh,
let's keep buying, you know, and
it's easy to get on
let's
the
just
roll.
buy. Let's just keep my guys working. Let's just keep my guys working. Not a good idea, right? You need to worry about you and your family. You know, the guys are going to need to worry about themselves. You know what I mean? Like, you know what I mean?
Exactly.
You can't get stuck on that hamster wheel because the music will stop at some point.
Yeah.
And the music is stopping right now.
Yeah.
Like, interest rates are at over 8%, right? And people are just going to have to make some hard decisions. There's just no doubt about it. People are dropping their prices. I had a seller yesterday call me. We've officially dropped her price below to what she bought it for.
Mm-hmm.
And she's going to lose the realtor commissions. You know what I mean?
Mm-hmm.
She's already at that level right now.
Wow.
You know what I mean? Sellers haven't made that. The problem is sellers haven't really done that yet. It's coming.
Yeah.
Everybody's holding the line at the price that they paid.
Uh-huh.
Nobody wants to dip below that price. It's coming. The prices are about to go below and people are going to start losing.
Yeah.
You know what I mean? And when that starts happening, it's going to start snowballing. And there's going to be some issues that might ramify, but could also be opportunities, right?
Yeah.
For people to pick up properties and expand.
Yeah. Exactly. You know, you just have to find, like, in the short-term rental market, you know, talking about one of your exit strategies is, okay, maybe I've gone as lean on all of my operating expenses as I can. I can't get any leaner and keep up the same guest experience. So, like, what do you do? Well, you look at another lever, and that's you got to increase revenue. So what does that mean? Put wallpaper, you know, up. Do these small things, like whenever you're out of ideas to cut things, you got to add things to pump your revenue up.
No doubt, either services or something, right?
Yeah,
something that's going to keep you afloat. And I mean, a lot of people are doing that, right? I know a friend of mine, or you know, the group that you spoke at, he added property management and construction.
Yeah,
right. He was in strictly real estate investing, but now he's doing property management and construction to keep himself afloat, right? You see some of these coaches, online gurus, but nobody's wanting to pay for them. And now they're becoming coaches in physical health or physical fitness, or coaches in something other than real estate, because real estate's drying up. There's not a lot of money in it, right? So they're trying to figure out other ways to survive. So you're going to start to see people think of inventive ways to make it work.
Exactly. And I'm already seeing that in my industry too.
Right.
Oh, yeah.
Like what, in what way? Like,
just different coaching, programs, or, like consulting, offering, you know, your services as consulting, marketing, you know, we started.
Talk about that. What did y'all start? Y'all started a marketing something. Tell me about that.
Yeah. So I kind of saw this, excuse me. I kind of saw this kind of dip coming a while back. And one of the things that we all kind of know as short-term rental operators that we should be marketing is that we have all this data, and data is so valuable, right? So we have past guests, names, phone numbers, emails, and we're not doing anything with it because short-term rental operation, it's a full-time job, you know, passive income, right? Well,
it does not exist. Passive income is a farce. There is nothing that's passive unless you're truly a limited partner and give your cash to Sam, and Sam takes it and Sam runs with it, which I'm sure Sam will do if you want him to.
Yeah. If it makes sense. And so anyway, where was I? So we have all this. We knew we needed to market, and so there were just a few different marketing solutions around. But the two basic models were, hey, here's a software, you can log into it, and here's some instructional videos and some documentation. Learn it yourself. By the way, you got to pay us $200. It's going up to $250 a month for you to, go to marketing school. You don't have time to do that. The other one was professional, like hotel, marketing solutions where everything is customized, and it's $500 an email blast. Okay. Yeah. And then like thousands of dollars for onboarding. And I was like, man, there's just no like plug and play solution out there that I can be, marketing. Right. And to my past guests. So after they leave, we can reach out to them and say, hey, thanks for, staying with us. You were a great guest. We'd love for you to come back and check out our other properties. Would you be interested? And that's a text message. And so if they say yes, we say, okay, great. No more Airbnb or VRBO fees for you. Come back, visit this site. And by the way, there's a 10% off coupon for you just because you're a good person and we loved having you. So that added to the 15% Airbnb or VRBO fees that you don't have to pay. So that's like a 25% off your next vacation. And so from there, it's a monthly text and email saying, either giving them value through coupons on their next stay or local hotspots you may know about. You may not know about local events, stuff like that. And so I did that, and I was like, man, I've got to share this with other people that I know because there's just so much value packed into it. Because again, it's doing things other people aren't doing that they don't have the time to do, or they don't have the knowledge to do.
Yeah. I mean, it's again about differentiation, right? How can you do that? But by providing a user experience that's second to none, right? Yeah. Yours is via getting them back, getting them a cheaper rate, giving them more white glove service all the way through, creates a differentiation between you and other providers, right? Yeah. I mean, that's what we do at Falaya. That's straight up what we do while we film the video content here on the green screen, is to move consumers through efficiently through the end of the sale, right? That's awesome. And using that technology to do it, right? So that's awesome. I think there really is a market for that and a niche for that. And, short-term rentals obviously needs a way to differentiate themselves. You get lost in the noise. And the thing is, you're also a slave to what VRBO does and what Airbnb does and where they're going to put you and where are they going to display you, and are you going to have to rank for that or pay for that, or ads here, Facebook ads, Instagram ads. And I mean, when you can go direct to consumer, that's definitely way better, right? Yeah. I mean, it's just, there's no doubt about it.
Absolutely. So do you guys have kind of a similar kind of challenge or I guess scenario in like going direct versus?
Yeah. I mean, for us right now, I mean, our technology is second to none. I mean, you can list a property in 5 minutes, put it on the MLS. So our technology from listing to closing is really efficient. Yeah. The key is to get to listing, right? The only thing that Falaya is working on right now is how do we get a consumer from them having no clue what Falaya is, not even being able to say our name, to then being able to use us, right? Yeah. And so that if we figure that out, it's going to be a rocket ride, and it's going to be a whole lot of fun, and that's what we're working on, right? So that's exactly what you're working on, right? Yeah. Is trying to figure out how do you acquire the customer, right? And how can you do it cheaply? Yeah. And if that's really what it boils down to every business. Yeah. It's the lifeblood of any business. It doesn't matter what you do. Right. So if you could figure out a way to perfect that, you can use it for short-term rentals. You can use it for anything. Yeah.
Yeah. Well, you guys just looking around here have the technology and the gear and the setup to do it.
Yeah.
I can tell you.
We work really hard. I mean, Jacob's a really good master at this. He's he's been putting in the work, man. A lot of hours, a lot of time, a lot of effort. We just brought on a new team member, Stafford, who's going to help us in Texas and help us with builders, contractors, and investors. So, we're excited about the opportunity to expand across the Southeast and the opportunities in front of us. I don't know if did you hear what happened yesterday in the news?
I'm not sure. It was Halloween. It was pretty crazy.
So yesterday, NAR, Keller Williams, and Home Services of America got a $1.7 billion judgment issued against them for I guess conspiring to inflate buyer agent commissions is how they worded it. Okay, so basically holding commissions up for buyer agents. So huge judgment on what does that do for buyer agent commissions? What does that do for agents? How are agents, will there always be compensation offered to buyer agents? How will that play out, shake out? How will sellers react? How will brokerages react? There's other lawsuits that are pending or coming on that are being launched against other brokerages. It's an all-out attack on agent commissions and buyer agent commissions in particular.
Wow. So what effect do you think that's going to have on brokerages?
I mean, I think that it's going to make them think about how they service a client. I think immediately you're not going to see much of a difference. Yeah. Tomorrow, next week, I don't think you're going to see much of a difference. I think it's going to be a slow process over the next 2 to 3 years where you start to see new models come out, such as Falaya. I hate to say it, but such as Falaya and other options out there that are going to service the consumer in new and inventive ways. I think listing agents will have to bring on, they may still ask for 5%. And then how do they service buyers? Do they have agents that work underneath them? I think that there could be a different transition on the model and how consumers are serviced. It's going to be interesting to see how it plays out. I don't think it's going to change a lot, honestly, until sellers start to say, I'm not paying, and how does that shake out?
Right.
And I don't think it'll immediately be that. I think that'll happen over time where sellers start to draw a line in the sand.
Yeah.
And say, no, you need to pay for it. I think a great product, a $1 billion idea for any of you finance guys out there is to go figure out a way to roll the buyer agent commission into the loan. Right?
Yeah.
Why not?
Right.
Okay, you want to hire an agent to help you get this house? Okay, here's $6,000 to do so. It'll be on your mortgage. It'll be an extra $5 a month.
Yeah.
See what I'm saying?
Yeah.
Like if that was in the mortgage product, this would no longer be a problem. And then buyers could pick how much they want to pay their agent.
Right.
Right. That's the solution to solve the whole problem.
Yeah.
But we don't have that product.
Sounds like you got some homework.
Yeah. Right. Man, you got to have a lot of money, and that's a lot harder. There ain't no way I'm getting to that. But I just gave away an idea.
Yeah, I know.
Because, who doesn't? But the thing is, will buyers, if they're required to pay, would they pay?
Yeah.
You see what I'm saying?
Right.
Like that's really the question, because would they pay if they didn't have to? You see what I'm saying? Like
that's an option now on the
now
table.
It's an option. Like that's the problem with the system, is that you don't really know if buyers would really pay because they're not really paying. The seller's paying.
Right. So I know at least for short-term rentals the past few years, there have been these different loan products come out and things like that. I guess you guys are seeing the same things. Why wouldn't that be a potential loan product, right?
I think it should be. The question is, who's going to go with that? Who's going to? The other thing is that it's not. The problem is the appraisal, right? Loans are based on an appraisal. So the bank is at risk of that buyer agent commission if it's above the appraised value, right? If the appraisal comes in dead even at the purchase price, which it does 90% of the time, it's magical how that happens.
It's crazy.
It's crazy how that happens every time. But anyway, then the bank is in trouble.
Yeah.
Especially if the price of the house goes down and the market shifts.
Yeah.
You know what I mean?
Yeah.
Now they're down the buyer agent commission and the market price. So it exposes the bank more.
Yeah.
You know, because they can't recoup that cost if the person defaults.
Yeah. Yeah.
So you got to charge a higher interest rate, possibly. So there could be you got to make your money somehow.
Yeah.
You see what I'm saying? So they're going to charge a higher interest rate.
Yeah.
You know, I mean, so will buyers want to pay the higher interest rate?
Yeah.
Like there's so many variables there. You understand what I'm saying? It's not so simple that I'm making it out to be. But I definitely think there's an option there.
Yeah.
That would solve all the problems, because then the buyer directs the money. The buyer says how much they're going to pay. They've put it in their loan.
Yeah.
You know, that solves the problem of all this noise.
Yeah.
You know, of them just being able to say, all right, I'm paying $7,000 to my buyer agent because I see the value. Right. That's not happening today.
Right.
It'd be interesting to see how that affects like the purchases and sales of short-term rentals. Like, does that have an effect on it? Do you think any of the issues with agents and commissions will have an effect on sales? I mean, I don't think.
I don't think so. But it might. You know, again, it's all about underwriting the deal and see if it makes sense. And you have to, and that's what a lot of people don't do, is they don't even factor in like the furnishing costs and things like that to furnish the place.
Or grossly underestimate that stuff, just like they do with flips and other things. You underestimate the repair costs.
Yeah, let's not put on those glasses that have roses all over them. Okay,
right.
Let's be real about this. And I mean,
costs have gone up too. Even IKEA furniture is expensive these days, right? You know what I mean? It looks good, but
bleach. The price of bleach. Oh God, it's crazy.
It is crazy, man. Everything's gotten more expensive. I mean, good God. So it's nuts. But anyway, it's just we'll see. The jury's still out on what's going to happen and transpire. But I'll tell you this: I think it's a great time for Falaya and an opportunity for us to expand, grab market share, help consumers make more choices, decide how they want to sell.
Yeah,
and it'll give more options, right? More options on how to service consumers, which ultimately will lead to models that are better for consumers and more efficient models, because consumers will pick the ones they like.
Yeah.
Instead of just being stuck with the ones that have always been. See what I'm saying?
Yeah.
Like, it doesn't necessarily mean that Falaya is right. It doesn't necessarily mean that some other brokerage is right. It means that the market will do what the market does.
Yeah.
You see what I'm saying?
Yeah.
You got to let the market do what the market does. Right. And I can tell you from my experience, we don't make sellers list property at 5%. We tell them, what do you want to list it for? We're probably the first brokerage in the world that did that. Like, seriously. Like, I don't think there were many other brokerages in the country that were doing that, at all a year and a half ago. But they're going to have to here come shortly.
Yeah.
And every time that we would list a property and it would drop below 2.5%, I would inherently get a phone call from an agent or a broker complaining or saying, why aren't you falling in line? Why aren't you offering 2.5%? I can't believe this. Right? So there was groupthink and there was push. I mean, it's clear as day that the decision was the right decision. It stinks to hear that, but it was absolutely the right decision.
Yeah. Yeah. Well, that's how you're doing something big, right? If everybody loves it, if everybody hates it, you're gonna have,
Jacob tries to tell me that all the time. He's like, we need some haters, man. We need some people just yelling at us, because that's when we know we really have made something of ourselves. You know what I mean?
Yeah, a little polarizing. Yeah.
A little polarizing, a little hate can go a long way. You know what I mean? But anyway, but we'll see how it all plays out. So tell us a little bit about your background. I kind of want to hear, your story prior to real estate and short term. Like, what kind of started your career, and then how did that morph into real estate? Kind of want to hear some background on that.
Yeah, sure. Born and raised here in Baton Rouge. Thought I wanted to be a dentist for the 4-day work week,
Dude, I mean, it's a great gig. Being a dentist, I'm just going to go ahead and put that out there. What a deal, man.
Yeah.
These guys rickroll. They show up at 7 a.m., They leave at 3 and they work 4 days a week and they roll.
Yeah.
And then what kind of like restrictions do they have? Like, I mean, yeah, you could get some emergency calls on the weekend if someone blows out a crown or something like that, is really in pain, but you're probably just going to tell them, here, take this, come see me Monday. You know what I mean? I mean, unless you really know the person, you're going to just deal with it on Monday. You know what I mean?
Yeah.
You know?
Exactly.
So it's like the best job ever, in my opinion. And they make good money.
Yeah.
They make good money.
They do. And then, I started shadowing and studying for the test and everything. And, a couple things. One, I couldn't pass the stupid test. I could. I got a grade that was passing, but like that year, like was a stellar year for like everybody else. Right. And so.
Oh, they do it by curve.
Yeah. Yeah. Kind of.
Gotcha.
But then like before that, I was kind of having second thoughts. I was like, man, can I stay in like an office all day and just go from office to office to office? And I'm just not.
I get your point there.
I'm not that kind of guy. So
they supposedly they do have high suicide rate.
Looking at a black hole all day, all this stuff, whatever. But yeah, I love my dentist stuff. But anyways, I guess that was a blessing in disguise. And then fast forward, I graduate LSU and I go into construction in the best time in recent history in 2008.
Oh, wow.
And start, I'm a partner to this residential home builder that wants to get into commercial. And so we're doing that. We're doing well. He wants to get into commercial. I take the commercial test. I pass it. I use his business license for the residential. And like things just start, sliding, as we all know they did. I was left literally holding the bag, talking to all these subs, and I was like, I don't want any part of this construction.
So I've heard that same story from a couple guys.
Really?
Yeah, they were contractors, and then they went through that, and they were like, "Screw this! I ain't doing it ever again." You know what I mean? Because they were stuck, and they thought they were gonna go under for their whole life. Some of them were stuck holding $1 million bag. Like, it's going to be interesting to see how this plays out with the next couple of years with that, it's coming, man. The pain's coming, for the builders again. And when will it happen? And, who knows, when's the music going to stop? We're in that same situation of 2008. Right. So just a little bit of data for you. Mm-hmm. Like we're gonna close 4 million houses this year. We closed like 6.5 at the height of COVID. Wow. Average since I've been doing this, like 5 million. Uh-huh. We were the lowest since 2008. Below that, even into the 2000 pop. So I mean, it's unbelievable, the record lows of sales that we're on, right? Not sales value dropping, but volume of sales, like turnover of closings.
Gotcha.
The slowest volume ever. It's basically signaling an issue.
Yeah.
The only thing we haven't seen is the price drop yet.
Yeah.
You know what I mean? We've seen the issue of not selling, but we haven't seen the price drop yet because people don't have to sell because they got a 2.5 mortgage and they haven't lost their job yet.
Right.
Yeah.
That's exactly right, man. And that's why there's, not as much supply coming on the market anymore because it's, for short-term rental operators that are in, operating right now, that's good. Less competition's coming on because of that. I mean, the two, industries are so closely tied together. I mean, they're practically, tied at the hip.
No doubt. So you were doing the home building thing.
Yeah. So I was doing that.
It crashed. Sorry to take you off a side street, but I just do that.
No, it's cool.
So, what happened after that? You had to brush yourself off.
Started selling sheetrock, and realized I wanted to sell something more than sheetrock.
There you
go. And so I got into IT sales.
Okay.
And so did that. Long story short, anyways, I did that for about 12 years. And so 2016, I was
a lot of money in that.
Yeah. I
A
mean,
lot of money in that.
look, man, I had my best year ever whenever I resigned from my W-2 last year.
Your
2
best
days
year
from
ever
now.
was in short-term rental?
No, it was in
Was it
IT sales. I had my best
So
year
you
ever.
retired at the top.
I've hung
You're
the
like
cleats at
you're
the
like
top, baby.
you're like John Elway walking
Yeah.
on the Super Bowl, right?
Yeah. Who knows what could have been? But
Yeah.
no, I've been doing it for. I got into rental real estate in 2016. Kind of house hacked before I knew what was house hacking.
Right.
Before
Before I knew it was house
yeah.
hacking. Before social media called it
Yeah,
house
right?
hacking. Yeah.
And I turned my home into a duplex and built a kitchen in the garage apartment upstairs because I didn't want to live with a roommate. So I said, well, I'll build a efficiency apartment. So I did that, and then I rented out the downstairs portion where I was living to someone, and I didn't know where I was going to live.
Yeah.
And so I just moved in with my dad.
Yeah.
And
Your real estate career started there.
yeah, figured it out. And I was like, I don't want to live here forever. So then I got into buying another duplex and then another duplex. And then so I had, three duplexes around Baton Rouge whenever I bought my personal home with my family.
Okay.
And then I had a tenant in one of the one bedrooms upstairs. She was a great tenant. And so anyways, she unexpectedly was going to move out. And this is like about a month after I started diving in head first into the short-term rental education and everything like that. And so I figured, look, this was the best time. It's an opportunity. It went for it because similar to, like I was talking about earlier, I had turned all the knobs, pushed all the buttons, all the levers to get my expenses as low as I could to get that margin up on these rental properties, long-term rentals, and I couldn't do anything else. So again, you have to just raise the revenue. So
Yeah.
I did that, and after that first one, the one bedroom, one bath, I was like, look, if I can spend like $10,000 to $15,000 flipping this into a short-term rental, and if there's success, I'm gonna see how it goes and take it from there. And in the first month, we netted more in profit than we did the last year in that long-term rental. So
Right.
I was like, okay, well, there's something to this.
There's no doubt there is. I mean, there really is, because I mean, you can make way more revenue, and you can pay 2 notes in a month easy,
Well,
and plus you got the appreciation, you've got all kind of tax benefits, all kind of, you're actively managing it.
Yeah.
It's a good thing, right? It's a good thing from
Yeah.
a lot of different perspectives. And
Right.
so, there's really not really a downside other than having to deal with the turnover, and if you can figure that system out like you're doing,
Mm-hmm.
then it's definitely a fun place to be.
Yeah. So I've been on both sides of it, right? The long-term rental management and the short-term co-hosting.
Right.
I tell people it's so like long-term rental property management is like cooking chili on a Sunday afternoon, right?
Right.
You just get up, put a pot of chili on, you kind of check it every once in a while in a crock pot. You're not going to mess anything up too bad. It pretty much takes care of itself. You get a good meal at the end of the day. That's about the level of effort. The level of effort to be a short-term rental co-host is like being in the kitchen at a Chick-fil-A on high noon at a Friday. You got to have
Chick-fil-A.
system, process, and procedure, man, because you got to keep that line moving.
No doubt, dude. No doubt.
So.
Chick-fil-A, baby. They're efficient.
They're efficient.
They are, man. That's too funny. I love me some Chick-fil-A.
Oh, yeah, man. I mean, there you
Dude,
go.
after every soccer game on a Saturday, dude, we bring my son. I get the nuggets with I do honey mustard. What sauce do you
Oh, do
use?
you?
What sauce?
Oh man, I
you a sauce
tell you,
guy?
I'm not a big sauce guy. Yeah,
You're not a sauce guy.
not a sauce guy. I'm not a big Chick-fil-A. Honestly,
No?
not a big Chick-fil-A guy either.
No?
If I'm being totally honest, like
Really not big on it, huh?
no.
Yeah, my wife's not big on the French fries. I'm like,
Yeah.
I kind of like the waffle fries. size. But
if we're talking breakfast, that's a whole nother deal. I'll do the mini bites any day of the week. That's about it, though. I'm not the chicken sandwich fry guy. I don't know.
Yeah, I get you.
So personal
it changes
preference.
my opinion on you, but it's all right. Just messing around.
We can go to breakfast, not lunch. How about that?
That sounds like a plan, dude. Sounds like a plan. So tell me a little bit about your thesis. Like, how do you think you're going to build your business? Like, as we're about to roll out to Texas, more states to come in the Southeast, we have a plan in place. Like, what is your business thesis on your short-term rental portfolio and how you want to grow your management company?
Yeah, that's a great question. So, like we were talking about earlier, building those teams is the most integral part of the business. And so I never want to go into a new market where I only have like one property. Well, I only have one property in Galveston right now. And so we want to use the economies of scale with those teams and the different markets. So just knowing the product that our competitors have and what our strengths are and what their weaknesses are. It's really approaching those homeowners and saying, hey, look, are you happy with this? We're doing this. It's a different model, but we've been proven to succeed doing this. And yes, while our management fee may be more expensive, but you're going to net more money at the end of the day. And just have some of those conversations, more the co-hosting. Yeah, I think
is a good way to grow it, without minimal investment.
Yeah.
And use your systems to scale.
Yeah, exactly.
Right.
So do that. We also do partnership models where for, like a reduced fee, there's an equity play in that as well. Just adding, like we're adding a hot tub or a pool to like one of our properties because just our water feature is huge.
Huge, right?
Yeah. The ROI on that is like astronomical.
For sure. No doubt about it. Who doesn't want to like drink some drinks and sit in a hot tub on vacation?
Yeah.
You know what I mean?
Yeah.
I mean, come on now.
Yeah.
I mean,
yeah,
that's right. It's always funner in a bubbly pool, right?
Yeah.
You know what I mean?
Exactly. Yeah, man.
Yeah.
And so, I think it's through co-hosting and then maybe whenever the market kind of levels out and, we're still looking for property because there's still deals to be had out there.
For sure. No doubt.
And
I think there's gonna be even more deals to come.
100%.
The question is, do you have the capital to acquire them? And then the issue with this time, you know why they say cash is king? Because cash is king, right? And the reason why,
it's true.
It's true, right? I'm just trying to.
Yeah.
But when interest rates rise, people get kicked in the teeth.
Oh yeah.
You know what I mean? But it also costs you more to finance it, so the deal doesn't work because you can't underwrite it. But if you got cash, guess what? You ain't got to underwrite shit because you got cash.
Yeah.
I mean, when you do have to underwrite it, what's your return on your money?
Yeah.
You don't have to underwrite it from a debt perspective, debt servicing perspective. But if you can get the 12%, 20%, whatever you're looking return on your money, it makes sense.
Oh, absolutely.
So the people sitting with a pile of cash are licking their chops right now.
Blood in the streets, just like every.
That's what I'm saying. Like that. I don't have quite that stack of cash. You know what I mean?
No, I'm working on to get there.
There's gonna be some people that make a lot of money in this next coming of the economy.
Yeah. I agree.
Because there's not many people like myself. I can't go buy a bunch of properties right now because I can't. I could underwrite them and finance them, but it would just get real tight. You know, if it wobbles at all, you're gonna die. Right. You know what I mean?
Mm-hmm.
Where when you have that cash capital, it just gives you wiggle room.
Absolutely. Yeah.
Well, I have my cousin has a rental property that he Airbnbs in Galveston.
Oh,
so we need to connect you and him.
Nice. Yeah.
I don't know what he's doing with it. He was managing it with his dad, so he might not need the help, but he also could be a tired landlord. You know what I mean? That needs Sam to come to the rescue. Who knows? I don't know.
Yeah.
I'm gonna connect you
to
him and see if you can help Nick.
Yeah.
Because he might need some help with that. It's possible, but.
Yeah, man, that'd be great. Thanks.
Yeah, I appreciate you coming on, man. I definitely think this was a good conversation.
That was fun.
Let everybody know about how to connect with you if they want to do short-term rentals and how to connect with you on a personal level as well.
Yeah. Yeah. Great. So our website is mistrpm.com, www.mistrpm. It's short for Mistretta. So there's no E in there. But that's where we direct folks who just want to learn more about being an operator or what's involved with, just kicking the tires on talking to us to see what it takes to maybe manage a property. We also, if you're interested in seeing what your property would be kind of underwritten as, or I say underwritten, a projected income analysis. So if you say, oh, well, I have this property right here, I want to see about what it could make as an Airbnb. You just go on our website, you hit, property income report, and you fill out all your information. In a couple days, we'll give you a high level, like, hey, look, here's a budgetary figure of about what it would gross as a short-term rental. So,
gotcha. That's cool. That's awesome.
Yeah,
so a lot of value add there, right?
Yeah.
Especially with people trying to figure out if it works or not.
Yeah, exactly. And then so that's just it. And then our properties are at tlcsuites.net. That's the website. That's our direct booking website that we give our friends and family. And you guys, if you want to avoid some Airbnb and VRBO fees. So it's interesting because on this one, I got to tell you this before we head out, but on this one property we have, it's oceanfront. It's at the Phoenix East in Orange Beach.
Is.
Yeah.
Well, I know where the Phoenixes are.
Yeah.
Not sure I know where the Phoenix East is.
Yeah, there's like 1,000 of them. Oh, yeah, exactly. Yeah. But like this one, it's a great property. Someone booked and Airbnb charged the guest 25% fee for them. And they charge hosts like a 3% fee. But you don't realize if you go and look up, just Google Airbnb guest fees, they say it's an average of 14.8%. So it varies.
Wow, that's crazy. I'll tell you, the fees are kind of ridiculous because when you start, you see the price and then the fees and then the cleaning. I mean, it's just
Well, and it
goes from this to this, and I'm just being honest. That pressure on the market is why people are starting to go back into hotels.
Yeah,
because I'm like, I don't know. I'm just gonna go to a hotel.
Right.
You know what I mean? We're going to Austin tomorrow, and I was looking at that, and I'm looking at VRBOs in Austin and Airbnbs, and I'm like, if I was gonna stay at one of those, I would have just ripped off a hotel.
Yeah,
because it's about the same price. I get really clean sheets. They turn
maybe you
them,
can use some points.
Exactly. There's a lot of benefits to it, and sometimes they have added features of a bar or restaurant. Which that's cool because then I could just order food. Yeah. I mean, there's some features that Airbnbs don't have.
Oh yeah.
And so the more that Airbnb or VRBO tries to squeeze that margin, the more they push consumers towards hotels away from themselves. So it's like, where do they figure out what's that right percentage? Enough for them to make enough money, but not enough to push people away because I'm making that buying decision and I'm like,
Exactly. And you want to know the funny thing about it is Airbnb is coming back on the host and saying, lower your cleaning fee, like lower these fees. Your price is too high. So Airbnb is much more friendly to the guest, even though they're charging them more.
Well, you would think that they would want you to jack the price up because they're getting 25% of the money.
I know.
Right? I mean, if I charge $20 more, you're making 25% on that. That's
not too bad.
Extra $5 for them. You know what I mean? You know what I mean?
Oh yeah.
I mean, at scale, that makes a big difference.
Oh yeah. Each point makes a huge difference, and so no telling how their algorithm works or what percentage rate they're going to charge guests. There's no reason a rhyme to it.
Well, the cost of everything's going up.
Yeah,
I'm sure that's what they're going to say. We raised our prices this month. We did. So it happens, Well, man, I really enjoyed it. Hopefully, if there's anything that we can do to help grow your business, we'd be happy to help out. And I'm sure you would do the same.
Yeah,
so
absolutely.
Definitely let's keep this conversation going, see if there's some partnerships in the future, and see how it goes.
Yeah. Sounds great, Barrett.
All right, Sam. Thanks for coming on. All right, guys. This has been the Falaya Focus Podcast. We'll see you next time. Hey guys, I wanted to take a second and say thank you for watching the Falaya Focus Podcast. At Falaya, we are reimagining the way real estate is bought and sold. So we need all the love and support we can get to grow our movement. Please tell all your friends and family about all the great things that we have going on here at Falaya. Please like, share, and subscribe to all of our content, and we'll see you next time on the Falaya Focus Podcast.